this may be very much like it was in 2006. It's always taken utilities to get a little bit of a supply shock in the market to break themselves of the mentality that the world is awash in endless, infinite amounts of cheap uranium. Through up cycles and down cycles in the uranium industry, the next discovery company always does better than the producers and developers. So that's where UEX really shines. We have the portfolio that's unmatched by anyone in our space.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up and please leave your comments below. It just helps us to try and understand what you're thinking about, what concerns you, what questions you'd like us to ask, and your general mood about different commodities in the marketplace. So please make an effort to do that. And if you haven't already done so, another plead from me, please click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, you can always click the notification bell. We spoke earlier today to Roger Lemaitre, who's the CEO of UEX Corp. They're a Canadian uranium explorer with multiple assets. Now, we wanted to catch up with Roger because he was at Cameco during the last cycle, and we wonder if there's any kind of similarities with regards to the way that utilities have behaved and came back into the market. And he gives us a rundown on that, worth having a look at that. We also talked to him about his projects, obviously, and get an update as to what he's been doing. Raised a bit of money before Christmas, is planning to spend that rather frugally until there's a little bit more color in the market as to what's going on. And we got a little bit more certainty as to when we think that spot price and contracts will start to be signed. So take a look in the description below. Lots covered. Anything you like in particular, click on the timestamp. That'll take you to that part of the video. Let's hear what Roger has to say. Hello, Roger. How are you, sir?
Doing great. How about yourself?
Yeah, not bad. Not bad. You hold up at home like everyone else?
Have been, yes, have been. It's we were one of the earlier companies to get involved in that. After coming out of the PDAC and hearing about people being sick there, we isolated ourselves pretty early in this whole process. So it's been a while.
Look, it's been a really exciting 2 weeks for uranium. Okay, so I'd like to let's kick off with that 1 minute summary first of all, but then I'd love to get into some macro bit with you. So give people who are new to this story that 1 minute overview.
Okay, so UEX is probably it is sort of the only portfolio company you can get out there in the uranium junior space right now. While we have projects ready to line up into development when the market says it's ready, at Shea Creek and Horseshoe Raven, and we have a huge portfolio, probably bigger than most juniors should have at the grassroots level. Where we really shine is in the mid-stage portfolio where we have mineralized holes or hot spots that are waiting to be followed up on. We have 5 projects with probably somewhere in the range of 15 to 20 targets on those 5 areas where we can make the next discovery. And through up cycles and down cycles in the uranium industry, the next discovery company always does better than the producers and developers. So that's where UEX really shines. We have the portfolio that's unmatched by anyone in our space.
Okay, cool. Well, let's talk about that in a second. Last week we saw Cameco make the announcement about Cigar Lake. People got pretty excited. They started projecting numbers, working at where the way the things were going. This week, we've seen KazAtomProm make a sort of similar announcement, standing down their workforce for 3 months. Now, Cigar Lake talked about 4 weeks, I think. Was that right?
Yeah, I hope it's only 4 weeks for their sake, but I would be very surprised if it's only 4 weeks. I think 3 months might be a little more realistic by the time they get up and going, and their impact on the stakeholder communities. They have so many people who work from these northern remote communities that in their camp, the risk of bringing it back to their really important stakeholders for not just them but for everyone else in the industry is really high. So I think it might be a little longer than that. We're a little behind in the province of Saskatchewan when it comes to the ramp up of COVID, so we haven't probably seen the peak or close to the peak yet. So it could be longer. It's possible. And
they've also had that double whammy with KazAtomProm, talking about a 3-month shutdown, because obviously Cameco were the beneficiary of some of that output as well. So it's not been a good couple of weeks for them.
Yeah, it's been a tough one. That's where they're going to buy some other pounds that they're not buying or getting from Cigar Lake. So yes, double whammy for sure for them, and all of that impacting, of course, the revenue stream as well.
Yeah, and we've been talking to a few other sort of influencers in the market, CEOs in the uranium space, and everyone's got a view as to what's happening in, say, Africa with Rossing and Husab, and what might be happening in Australia. And I say, doing those calculations, trying to work out just how how much, how many pounds have been taken out of the market as a result of COVID-19. And whatever the number, it's pounds that the market couldn't afford to have drop out of the market. I think we'll agree on that.
Oh yes, I would agree, and depending where you sit on the fence, of course.
Yeah, but I guess where we're going to get to is, what does it mean for you? What do you think that could mean for you?
Well, I think if you were to look back, turn the clock back a couple of weeks ago, the junior uranium space, I mean, the space has been down for such a long period of time. Things got extraordinarily dire for most of the companies out there. We saw it in the market valuation depreciations. I think this breathes a little bit of life back into the space, but I think more than anything else, it reminds me, and I've said, I think last time we talked, that it smells like 2005 all over again. And here we are now, maybe early 2005 to now late 2005. And it's always taken utilities to get a little bit of a supply shock in the market to break themselves of the mentality that the world is awash in endless, forever, infinite amounts of cheap uranium. And I think this may be very much like it was in 2006 when the Cigar Lake flood happened. And I remember it intimately because I was a manager at Cameco at the time. And I remember having to do a talk about the uranium junior space and how important it was to get a sustained price of around $40 a pound to maintain the industry in general. And I had a lot of utility people at the NEI in Quebec City the day of the Cigar Lake flood, and I ended up being the only Cameco person around at the time. And it was amazing. It was my first real exposure to utility buyers, and it was amazing to watch them sort of come to the realization that maybe the good times have changed. And I would say they're over, because there's always a cyclical process, but they were really shocked into the reality of, wait a second, this isn't going to end forever. So maybe what we're seeing supply shocks now is the first step in that process, which would be good because, quite frankly, at today's prices, nobody goes profit. So something has to give sooner or later. And maybe this is the impetus to start pushing that, but we shall see.
Okay, so using that historical reference of yours, how quickly does that shock start having an impact in the marketplace? Because we saw a little bump last week in the uranium price, but not a lot. And nothing's really happened this week, nothing meaningful. So what's the process they are going through, given your exposure to them previously? I can't imagine behavior has changed too much.
I think it's whether that they can procure what they need in the period that they need it in their time frame. We've seen them eat into inventories, both within their own sort of inventory and then the general inventories with a long 3 or 4 years worth of supply deficits. The question is whether or not there's any free trading uranium they can pick up out there. So the bottom line for the utility will be, when I go to the market, can I pick up what I need discretionary wise in the next month or 2 months that won't take a year to get? If they can't get it in the short term as a real supply, or as what would be a real spot price, then they'll start to push their sort of direction towards long-term pricing. And as long as the suppliers hold to their word and that they're not going to sign long-term supply contracts at today's prices because it's not sustainable, then there will be a push on price. And if they are willing, depending where they are at, they may change their mind. But yes, I think it's the beginning of that. It's one of the steps along the way. There could be another need for another supply shock to make that happen, something going down longer term. But I'm sure the utilities are sitting here going, well, this is a couple months. Can we weather it out? Can we pick up a couple discretionary pounds here and there? And if the answer is no, then it will move the price. And if the answer is yes, then they'll need the next little surprise.
But what does that price move look like? Or what did it look like? If we're going to use that as a reference point?
Around Cigar Lake, it went from $40 to $60 pretty much overnight. So we haven't seen that kind of response yet. So yes, it's the fear that there's not going to be out there.
Okay,
but I think right now that's probably not enough to say that's out there. If these things were to turn into longer term shutdowns than 3 months, then maybe it starts to get there.
Okay, but so it sounds like Cigar Lake was a massive shock, and I think by definition, shock changes behaviour. And your answer to me was, well, it depends how many pounds are out there and what their inventories look like. So this may not yet be the shock that they need. It's cumulatively, it could become that way. Like say if Olympic Dam were to close, and I think the indications are it's not going to. It may be disrupted, but not going to close. But it'll have an impact on output. But until they know what that means, I guess they're not going to make decisions.
I would agree. If they think they can make it through the next 3 or 4 months and things return back to normal, then yeah, they'll see if they can weather it out. If not, I think one of the things that's a little different now than it was back then. We had a few mini supply shocks along the way before the big Cigar Lake flood. There was the little Cigar Lake flood. There was the MacArthur River flood. There was the Ranger pit flooding as well along the way. But there was an amount of UF6 and UEP that was out in the market that you don't see today because it's been bought up in the last few months anyway. So it really does come down to can I meet if I'm a utility, can I meet my short-term needs or my medium-term needs? And I don't know if if you ask utilities today, they probably tell you yes. You ask them a month from now, they might feel differently.
Yeah, it's interesting. I mean, typically around this time of year, April, May, the utilities do make a statement about inventory levels. They're not obliged to, but typically they would choose to. Now, and again, I guess then it's at their discretion whether they do that now or whether they continue to hold their cards close to their chest, because that will impact the cost of their buying.
And I think part of it, particularly looking at the Section 232 thing, a lot of less discretionary buying in the last year. So inventories haven't been building for most utilities in the last year. They've been whittling away slightly. And from a junior exploration company portfolio perspective, I look at this and go, okay, we haven't seen them been buying. We've seen some of the other stuff that they normally come in short term whittle away. We've seen a few supply, constraints happening along the way. I'm going to be optimistic. Certainly, the market is starting to see that they think there could be a bit of a change. And from our point of view, that's I can't control those things. I can only control the things that we can control. We're not a player in the buying and selling uranium. So at this point in time, so we'll control what we can.
Yeah,
which is what our own operation.
It's kind of bizarre. It kind of feels like one of those, I don't know if you've got them in Canada or the States. They have those sort of seaside arcade games, and you put your dime in, it kind of falls down through sort of a maze. It falls down onto a level, and they pile up there. And then when you get enough up there, they fall down onto the next level. And if you get enough there, but they're always precariously balanced over the edge of the cliff, and you keep throwing your money in. Or in this case, all of these kind of big events which should have an impact, which just aren't. And I think people are just waiting for those coins to topple down into the bucket below. It's deeply frustrating, I'm sure, for shareholders, but it must be very frustrating for you.
For shareholders, for everybody. I think the strange part about it is I believe a more transparent market and a more realistic understanding by all the players would lead to a much more stable market where people would understand what's going on and be able to play appropriately, whether it's at the junior sector, whether it's at the nuclear power sector, end of the things, the end producer point of view, and everything in between. Mm-hmm. It's feast or famine for sure when it comes to what people believe.
Yeah, it's interesting.
But there's very entrenched positions as well. Very, very entrenched positions on both sides.
Very much so. But we've been also having conversations with generalist fund managers, and I think their ears are perked up at this point. They're not pulling the trigger, but they're definitely more interested than they have been for a long time, because they've been hearing the same stuff for the last 3-4 years. But I think it seems to be lining up, right? But we shall see.
Yeah,
we shall see, because I think most of them look at the spot price. I know you guys understand it's term and contracts, etc. But I think for generalists, they're looking at that spot price to move as the key indicator, and a lot more buying.
Yeah, everyone likes term, but even in all the long-term contracts, not all, but a whole lot of them do have some sort of tie back to spot price of some sort. There could be base escalated prices, but there's a lot of market-driven pricing as well. And spot price has a big impact on those prices. And so, yes, it has a huge impact. From an investor point of view, you want to, you also keep in mind the fact that long-term works bad on the price up and good on the way down when the spot price goes up and down.
Yeah. I'm just thinking about the optics really here, because for outsiders, they look at spot. You might know, we might understand that it's term, and even there it's kind of structured term at that. So, but it's a real indicator. And I was surprised the price didn't move more this week. Really surprised. And I think a lot of the chat and conversation in the marketplace seemed to have been right. This is it. This is our white swan, to use that well-worn
It
phrase.
comes down to buyer's ability to procure material when they need it, and if they can, then they will. I mean, the good news is that behind the scenes in the market space, we're seeing a change in the buyers in what they're looking for in the last 6-7 months. So we're not seeing speculators play a bigger role, which is kind of surprising when you think things are starting to move. You're seeing utilities take a bigger role, and they're starting to look more for I wouldn't say long term as what you hear a lot of people say. We're looking for term. They're looking for term contracts, but that sort of 3-4 year window, not the 10-year window, which everyone sort of thinks of as the golden age of if you're from the producer's point of view. I'm not sure that's coming back unless there's an extreme supply shortfall coming. And I don't know if that's actually going to ever manifest itself. That a lot of that was driven by Chinese incremental demand saying we're jumping into the market here in 2008 and we need X number of pounds. I think they're a little smarter than that now, and they're going to be incrementally coming into the market. So I'm not sure that 10-year contracts are going to be the norm, but 4 or 5 year contracts might be the norm in the next sort of run up. But we'll see. I'm certainly not the expert on that.
Yeah, well, like I won't bore you or drag you into conversations about who the beneficiaries will be and at what price, etc. But we want here to talk about you. So, thanks for giving us your views on that and your historical insight as to how people behaved in the last round. So, what's been happening? You raised a bit of money for Christmas. We had a chat.
We did, yeah.
How are things going?
Well, we intentionally went into this year with a slower than previous year's program in mind because the prices of the stock were low. We didn't want to dilute shareholders severely, so we're still on plan. We've done our work at West Bear, looking for uranium and cobalt just north of the West Bear deposit, and those results will be out imminently. We're just waiting for the last of the assay results to be processed. On our Christie Lake project, we've done the work in our area along the trend of the mineralized deposits where we thought there was an offset, and we were hoping to have some geophysics targeting, helping us refine our targeting a little bit better than what we had in the past, and we're just getting the results back from that, and they'll be out here shortly as well. But we're pretty encouraged by that. We will be going back into the field to do a very modest drill program at Christie in the Aurora North area. Our plan was to go out in June. I think we're going to defer that now until August or September, basically based on the COVID scenario here, and making sure that access for everybody and all stakeholders is safe. We see a lot of uncertainty in the markets, as you've seen, so we're very much looking at any possibility, and we have been paring costs back substantially so that we work way through into next year without much issue. So those are all things that we're still working on putting the final screws on in the next couple of days. But yes, we're very cognizant of the fact that while there's been this improvement in the market right now, we want to be very cautious.
Yeah, like I think that's sensible. I think most companies are going to get a free pass in the market. I would say that the uranium investors particularly had high hopes off the back of last week and this week's announcements, and I guess it's a very fast-moving, fluid environment at the moment to see if companies had been approaching you, had been talking about financing on whatever terms. Obviously, your share price has recovered along with everyone else's after the shock of the past month or so, which is good news. And I know you've always been very, very straight with us about how you go about managing these things. So I think people do understand that, but at the same time, is there a kind of cause for hope, or is there any kind of glimmer of light in the distance that you've identified, or is it just head down, control what you can control, and we'll let you know?
I think our view has always been control what we can control. If opportunities pop up, yes, we look at them. There's certainly been a lot of talk within the sector about opportunities within groups over the last little while, but it's difficult because it's hard to finance just what you already have in your portfolio. So yes, we'll always look at those, and if things continue to improve, then there's always an opportunity to be able to do more. Maybe it's raising some money to be able to do some more things or acquire some more things. But for our company right now, we have that large portfolio, and so if we're going to add anything to the portfolio, it has to, we have 20 projects in the portfolio. We can fund 2 at best. There's no reason to bring something on that doesn't top 2 or 3 of our projects, and that those are few and far between right now in the space, and we definitely want to stay focused on the Athabasca.
Okay, no, I guess what I was getting at was a case of, do you see the last couple of weeks' announcements as a springboard to move forward, in which case do you get a little bit more aggressive with your plans? Or do you say, now tell you what, it's a cautious approach, we'll keep with the hunkering down strategy for now, we won't have conversations with people about money yet? I mean, which side are you on?
I think if you'd asked me a week ago, we would have been absolutely hunkered down no matter what. I think this week, if you were to look around and say, okay, well, at least you can keep your eye open to the possibility. But you need to pull the trigger today? Well, not necessarily. It's more of if it's the right thing at the right time, then we would think about it.
Right.
But we're assuming it's going to be hunkered down for a while.
But there's no inbound phone calls from groups going, well, hey, this is starting to look interesting. Come on, all CEOs say to me, we're having conversations all the time. So, is any inbounds?
Oh, there's definitely been people on the inbounds for sure. It's nothing like bouncing off the bottom to get people to pop out of the woodwork with greater than not necessarily the best opportunities you'd want to take advantage of. So I don't think for us being first to be in say new mining or new money, new financing is exactly where we want to be. We want to see things shake a little bit first.
Yeah.
Before we'd even think about it. But if you'd asked me, like I said a week ago, when we're starting in that under 10 cent range, you go, oh boy, this could be a very long time before things change. We shall, I think we're going to be a little more cautious. I'm more optimistic that things aren't going to be as dire as what we thought they would be a month ago, in terms of long-term financing in the industry and space. But it will really depend upon what happens in the next month with people's perception of the market of supply shortfalls.
Right.
If they're going to hold.
Okay, but you're not susceptible to any kind of predatory type funding or necessity for any predatory type funding. You've raised that, was it 1.6 or so before Christmas? You're good for the foreseeable future.
We're good through the year end. I don't think we're all that different. And if we're looking at doing more things in 2021, we're going to have to come back to the market. I think that's pretty much, almost all our peer companies are going to be in the same spot in the space because of the prolonged downturn. But no, we don't have to do anything that we don't need to do, and we don't have to do something. We try to avoid certain kinds of deals, and because they are very predatory and it's not fair to shareholders. So,
okay,
we could have raised $2 or $3 million more back in November and December last year, and we didn't because we didn't think it was appropriate.
Okay, and did you take the opportunity when it was down at whatever 10 cents to load up? Did the board feel the need to support the stock, or did you think it would be temporary? What was your view?
Board would love to have loaded up on the stock, but because we're sitting on some drill results, we were actually waiting for the last of the drill results to come out. We were kind of blacked out. So
okay, interesting. Okay, well, I'll just finish off on this one question with you, which is, so where do you think you slip into the cycle if things? Because our view is what was end of the year, last quarter, right? That was our view. I think we may bring that forward a quarter. What's your take on when the market gets to a point where people do start coming back? And by that I mean where generalists come back in, where the spot price is at a point and contracts are being signed, where generalists can come back in, and prices start to move on the equities front. But you're an explorer, you're not a near-term producer. I think near-term producers are clearly going to be the beneficiary of any initial movement, but you will be able to get funded more easily and hopefully at a price which is more than that you would want. Let's put it like that, the price that you would want. So where do you fit into this?
Well, I would agree with you that we were thinking last quarter is probably the one where sort of the numbers hit the road. People start to find it difficult to pick up spot before this current supply shortfall. So I would agree things move up a quarter until we see what people are actually buying and selling over the next quarter. That's gonna lead the buyers and sellers to make their decisions, and until they do, we're not going to see a lot of movement. For us, as a development company with resources there, I think we're in that weird space between the grassroots explorers and the developers. But once again, it's that portfolio of opportunities that people can multiply on better than you can if you're a developer or a producer. And I think because people are coming back into the space, what's unique about us, if they're looking for a basket or a portfolio, they can build one from the various companies or they can invest in one. And I think that's where we fit into the space.
Okay, fantastic. Well, Roger, thanks very much for the update. I do appreciate your candor every time we talk. So, I think you run a tight ship there under difficult conditions over the past few years. I hope I'm wrong. I hope the movement does happen a lot quicker. I'd love to talk to you at some point, when that happens, what your plan is with all of these assets, because I think, it's a strength and it's a liability for you. So, the opportunity is big for sure if you get that model right. So you come back on and tell us all about it when you've got a bit more clarity about what's happening in the market.
Yeah, agreed. And when if the market turns and the new companies can get in, or the existing old grassroots companies are looking to upgrade their portfolio, we can get more of those projects working because they'd be flagships for a lot of other companies. And that's our plan with the I wouldn't say the non-core assets, but generally the non-core assets that we have that would still be top notch for a lot of our peer companies, or smaller peer companies for sure. I'd love to set them out there today, but no one can finance them, so why bother?
Well, true. Pragmatic. Roger, thanks very much for your time. Enjoy the rest of the week. I hope we finally get out of our houses and back to work properly. And like I say, do pick up that phone when you've got something to say, okay?
I definitely will. Definitely. Thank you very much.